Hello. Okay, welcome to our live today. Today we are going to talk. Today we are going to talk about something that is fun and powerful. How to turn your personal vacation into tax deduction. Imagine taking a trip with your family and at the same time having Uncle Sam taking part of that expenses. Sounds good, right? Well, it's 100% possible if you follow the rules. So let's break it down step by step. Okay, so like I said, we're going to talk about how to turn your personal vacation into tax deductible today. So before we start, I'm Nikki Motin. I'm an EA and CPA. I'm a founder of Andorra Consulting. So let's dive into it. So what is the rule? What is the IRS rule? What makes the travel expenses deductible? First, the travel expense must be ordinary and necessary for business purpose. The primary purpose must be business. And then the deduction, if the primary purpose is expenses, so the airfare, the login, and the meal transportation and conference fee will be deductible. But for the meal, it's only 50% of the expense that is deductible. The other one are 100% deductible if the primary purpose is for business. So what is not deductible is your family expenses. So the airfare for your family and then the hotel for your family if they are not employee on your business. But if they are employee of your business, those are 100% deductible. So how to structure your vacation for deduction? So the strategy here is to combine your business, your business trip with your vacation. So what is the first one? The first purpose should be the business. So, and the number for day of the business of the time spent. So the business day should be more than the personal day. So if the business day is more than the personal day, then the airfare is deductible. And the weekend rules. So for the weekend rules, if your business fall they fall on both sides, on both sides of the weekend, then your hotel costs on the weekend are deductible. And the conference rule is that the conference fees and then the conference fee is deductible. You also want to make sure that you register for the conferences that the conference in the city that you want to visit. So if you want to visit Florida or Orlando, you want to make sure that your business conference should be in Orlando, and then you can register. So like I said, how to be qualified, we say schedule and how to be qualified, schedule in advance, meeting with vendor, site visit or ordinary event. That is what you want to schedule in advance in the city that you want to visit with your family. And for the total day, I say for the total day, your business day should be more than your personal day. For example, if you go to Orlando, you spend 7 days there. So your business day should be at least 4 days out of the 7. So if it's 4 days out of 7, most of your expenses are deductible. And when you want to add family on your business trip, as you can add family day before or after the business, after the event. Don't put the family day, don't put the family between the events. It has to be after, it has to be before or after. And then if your majority of day is more than the business day, the airfare is deductible. So we're gonna look at a scenario. I have a scenario here where you can see which one is deductible and which one is not. If you have if you are going to a business event, if you are mixing the business event, the business travel with the vacation. So this is the scenario. First, you have 3 days, you attend 3 days consortium exposition in Ohio, in Orlando, and then you fly on Thursday. You attend that exposition from Friday to Sunday, and then you spend Monday and Tuesday at Disney with your family. So let's see which one of these expenses is deductible. First, your your airfare. Your airfare is deductible. Your airfare is deductible. Your hotel from Thursday to Sunday is deductible. The hotel from Monday to Tuesday is not deductible. The family airfare and ride or hotel is not deductible. So the exposition fees and the Uber ride, those expenses are deductible because it's business related. And business meal is 50% deductible. And you also want to make sure that you track the deduction. You have a spreadsheet where you track deduction. You track that deduction. You want to track your business versus your personal. What is your business? What is your business expense? What is your personal expense? And you can pull it as well. So I'm going to show you an example of one or a general contractor that we work with. It has a 3-day supply conference in Las Vegas. So he buy a flight ticket of $450. He stay in the hotel. The hotel price for those 3 days, for the business 3 day, was $900. And then the meal was $300. Then the family joined him for 2 days to stay an extra 2 days. So that is the 600 additional hotel and then the family ticket. So on this one, you will see that we have $1,650 that is deductible for those 3 days that were for business. So we have the the flight ticket that is 100% deductible. The 3 days of the hotel is 100% deductible, and then 50% deductible for business meal. And the personal expense was 1,200. The 1,200 was not deductible because that was for the extra 2 night. That was for the family expense. The extra 2 nights that they spend there. So what is the net result here? You enjoy your vacation and you reduce, at the same time, you reduce your tax bill by $1,650. Now, we talk about the rule in the United States. The rule for the international is a little bit different. The IRS is very strict about international rule, about international travel. So this is the condition for this is the airfare deduction rule. So to have the 100% deduction for the flight ticket, the business trip is primarily for business. The trip is primarily for business, so which means more than 50% of your day are business. And you can prorate if your business is less than 100% of the trip on your trip. So for example, you have 4 days of business plus 6 day person or the 6 day personal in Paris. So in this case, only 40% of your airfare is deductible. You won't deduct the 100%. Only that only 40%. So if you can look the difference here. So if that was in the United States, because the main purpose was the business, so you will deduct that 100%, you will deduct that airfare 100%. But in this case, is the international rule. Since you spend if you spend more less day for business, then you will have to prorate your travel ticket. The meal and login will be 50% deductible for those days. And also, this is example for business purpose. What for this business purpose you want to go out of the United States for it? This is an example. It can be other business. It can be other type of business. So I put an example here. You are negotiating contract with overseas partner or vendor. You can maybe visit a job site there, or you have a plan there. You can go and visit that job site. So this is just an example. You might have a meeting out there with a partner or with a customer. So it depends what business purpose you are that you are going to attend internationally. Okay. So how to use this before the year end? Here is how you can implement this strategy now before December 31st. You can attend an industry conference in the city that you want to visit. So first choose the city you want to visit, and then look if there's a conference there that you can attend for the business purpose. Schedule vendor or supply visit. You can schedule vendor or supply visit and combine that with lecture. So you have to choose where you are going first and where you want to visit first. And then you also want to hold a strategic planning retreat with your leadership team at the destination that you really want to visit. So those are the example of what you can do before year end to be entire on this tax loophole. If you want to have a family trip, you can use that. So now, how to stay in compliance? IRS want to know, so when the IRS come for the audit, the first thing they want to know, what was the purpose? What was the business purpose? And then where are the supporting documentation? So the purpose, that is the first question. And the second question is the documentation. So you always want to keep this to be in compliance, because if you don't keep those documentation, or you don't have a business purpose for your trip, then that is going to be disallowed. For example, this is an example that what I said here, what I put here, that you also have to make sure you have the agenda of the meeting and then the itinerary. That you also have meeting confirmation or email. It can be via email or it can be maybe a letter that they send out. So you want to make sure that you have that meeting confirmation. And then you also have to keep the receipt and payment, the proof of payment together. The note from the meeting, the outcome, and then that have to be, you can have it in writing or you can have a log that you have it there. So you want to make sure that you keep those documentation. It's very important. Those are the two questions IRS will ask you if you have an audit for this. If you have an audit, what is the business purpose? Where are the supporting documentation? So before you plan to enjoy, to mix your family, the business travel with your personal vacation. Those are the two main questions that you want to ask yourself before you do that, because these two questions will help you to plan ahead, to know what have to be done before you move ahead. Then, so I have some task strategy tip here. So like I said, we always recommend to keep conference receipt, meeting note, boarding pass, and also you want to track your business versus personal day. Those are that is the rate that is the business versus personal will help you to prorate what is business, to prorate what is business and what is what is personal. So this one, if you have all of this set up, it can be, so this folder, this travel folder can be physical, can be digital. It's just for you to make sure that you have the documentation that you need to claim these expenses, that you are, like we say, you are audit proof. Yes. So common mistake that I have seen people make is they reclaim the whole trip as a business. So if you claim the whole trip as a business, that is a mistake, because if you got audited, for sure you're gonna lose the entire deduction. And then you deduct your spouse and children travel when they don't have any business role. This one will be possible if your wife is a partner or your company, or your wife is a employee, your wife, or if your children are partner or they're employee in your business. Otherwise, that will be personal expense. It won't be deductible, but it won't be deductible. And sometimes you don't separate your business receipt with your personal. You want to make sure that when you go there to enjoy your vacation and your business as a business as well, you want to make sure that whenever whenever you buy and that is personal related, should be separate for the business. So you will have one receipt only for the business and another receipt for the personal. So you don't mix them together. You don't put everything in one receipt. So you should have two separate receipts. That will help you to also be audit ready as well. You or sometimes you don't have any agenda, no, any proof of meeting. You said that you went for a meeting, you travel for a meeting, for a business meeting, and you don't have any proof for that business meeting, for that conference that you attend, and you think the IRS will agree with you. No, it won't agree with you, even though it's true, but they need proof. They need proof. If you don't have proof, they will disallow this deduction. So you want to make sure that you have agenda, you have proof of meeting, you have the note, you have maybe a recording So you need proof. And then everything that is entertainment, don't try to deduct entertainment. Entertainment is not deductible. It's not deductible. So this is disallowed, automatically disallowed by the IRS. So this is all I wanted to share with you today. This is all I wanted to share with you today. And if you like it, if you think that is something that you will like to share, that can help somebody that you know, please like the video and share. And if you want to implement this by yourself, go ahead and do it. I have give you all the tools that you need to implement it by yourself. But if you think that you need help to implement this, okay, so reach out to us, book a free consultation for tax strategy analysis with us. We'll be happy to look at your number and implement it with other tax strategy that we have, that we use to help other contractor, other business owner honor with it. And thank you again for joining me. Thank you again for being with me on this live, and let's meet again next week for our weekly live at the same time. Thank you. Bye-bye.